Well, good afternoon, everyone, and thank you, Tim. My name is Mike Labriola. I'm a corporate securities partner in the Washington, D.C. office of Wilson, Sonsini, Goodrich, and Rosati. We're a U.S. law firm that actually just recently opened our London, or we're announcing yesterday that we're opening a London office on August 1st here. So we're delighted to be, we've been in market here working with a lot of companies coming across to the U.S. and I'm delighted to introduce our panel today, who is a nice array of investors in the market here with different stages and also different sector focuses here. And all of them have a number of portfolio companies that play in multiple markets, whether it's the U.S., Europe, Asia, and otherwise there. So I'm going to let them introduce themselves briefly, and then we're going to jump right into the panel. But look forward to hearing from questions from all of you as well. So, Nazo, you want to start us off, please?
Sure. My name is Nazo Moosa. I manage a fund called BT Partners, which is a specialist tech European investment growth fund. My background is now 2 decades in tech, starting with the early days of the Carlyle fund. My ex-colleague Fernando was here just before. I was there for funds 1, 2, and 3. Almost every single one of the companies that we back, there's kind of 3 or 4 levers for growth, and the first lever is inevitably internationalization. These are tech companies that need larger markets, and so we look forward to having that conversation with you. The company maybe I would highlight is a company called Omada, whose CEO Morten is somewhere there up there in the audience. Hi, Morten. Just as an example of internationalization, where we would normally come in. Omada sits somewhere between enterprise software and cybersecurity. The company was already profitable, growing very nicely at 25%, but mostly in the Nordics, Copenhagen-based company. And we basically had to convince Morten to take on some additional capital, really to get the business to be positioned strategically. And to do that, it required a lot more growth. It required a changing of the organization, recruitment of a number of senior people within the organization, and really to put the focus on markets outside the Nordics. So today, 3 years later, that company has just 35% of its sales in Scandinavia. The company has grown headcount by about 100%, and growth has gone from about 25% to about 60% top-line growth. So that's the kind of transformational growth, and they're probably somewhere halfway through that journey.
Outstanding. James?
Hi, I'm James Lewis from Dowing Ventures, which is the early stage arm of Downing itself. We invest broadly between £500,000 to £5 million in seed through to actually Series C type businesses. And so in preparation for this, I actually sat down and thought how many of our businesses are involved internationally or parts on any elements that are sales or team there, and it's well over 50% that are that have something to do internationally, and whether that's a tech team or sales or even from not just tech stuff. So it's high on the agenda all the time at board meetings. We're always talking about what the next steps are. We're always talking about what the opportunities might be, and some successes and some not so good stories. So,
Kevin?
Hi, my name's Kevin Grassby. I'm the managing partner and co-founder of a business called Bowmark Capital. We are UK mid-market investors. We typically write equity checks of between 25 and 50 million pounds of equity. I would say 15 years ago, we were in the camp of backing UK service businesses. So typically, nursing home businesses or restaurants where you could kind of fund domestic rollout, and that was going to generate your return. I think we've probably become sort of late converts, late but passionate converts to internationalisation, partly because I think the UK, it's harder to find the level of growth that you could find 15 years ago in that sort of price-value equation. So I would say the portfolio 15 years ago probably had 25% businesses with international growth prospects. Now it's 75-80%. Reflecting that skew towards the growth opportunity.
Great. Matt?
Good afternoon, everyone, and well done for making it to the last session of the day. Matt Lyons, Vespa Capital. We at Vespa Capital invest in UK-headquartered niche B2B businesses that typically generate EBITDA between £2 and £5 million, with the objective of at least doubling those profits within our investment time horizon. Our specialty within that is investing in owner-manager businesses who have developed either a product or a service which is close to market-leading or best-in-class, and therefore has not only got some sales in its home market, but has got either an element of sales internationally or a very large element of sales internationally. And for us, we look at that international sales piece on every investment we do from two different perspectives. One is it's a credit quality criteria. You know, the more that you move away from just being a local product, the better the company is. And the second thing is if you've started the journey, which if you're making between £2 and £5 million, you're generally on a journey. That means that there are future markets or that there's an acceleration potential into other international markets, which, given that most to all of our portfolio has these set of characteristics, we hope that as investors we can be helpful in both the discussion of the strategic debate, helpful in terms of working out how to implement and add a bit of value from both ourselves and also the network we've built up over the years.
Thank you, Matt. So I think as a panel, I think we want to try and cover two topics or two themes throughout here that I think are relevant to the room here. We've got a mix of investors and also of companies and entrepreneurs in here as well. So I think the principal topic is going to be trying to get through the what, the where, the how of doing international expansion and how that works. But also, how do you fund it? Because all of that, the second theme is also because we're in a room full of people generating capital here. And deploying capital, how do you fund that international expansion? What do you where do you go to find those investors and the right types of investors? So I think, but before all that, I think we're going to start off. Matt, you and I had been talking the other day about the why of all this, and why is international expansion become so much more important now?
Yeah. I hope hopefully many of those themes have already come out through the course of today, and I'm sure that some of it's very self-evident. But when you undertake the decision to do some kind of international expansion, you are clearly taking on risk. The risk of underperformance, the risk of failure. You are certainly going to take up management bandwidth and time. You are probably going to be sinking an amount of capital into that. And so there are a number of downsides and issues you need to be confident of that you're going to move into a new market or make some real progress in multiple markets at the same time. And so it's really, in a world where you can do as much due diligence as you like about your international expansion and you can identify certain hurdles, you also know there are other hurdles out there that you can't see and are going to hit you. So you have to remain flexible and committed. And the reason why you might remain flexible and committed is because the size of the prize is clearly enormous. In that there's a multifaceted benefit of developing your company internationally. A few real basics would be you evidence that your product service is applicable to multiple markets. That means it's a better product, more people are going to be more interested in it. You obviously are now opening up more markets, which allows you to have a bigger runway for future growth. And you're also opening up yourself to potentially a broader buyer universe. And all of those three factors together will mean that the value of the investment that you have will grow, not only in terms of EBITDA, but also in terms of multiple. So I think from a business perspective and a shareholder value perspective, it's a no-brainer if you can get it right. And also from a company journey or personal perspective, I think all of us who have participated on the fringes of delivering international expansion successfully can say that the whole team, the company, the people involved get a real sense of pride and passion from doing that, from moving their company from a local entity into something bigger than that.
I think sometimes it can also be defensive. I mean, we had a business, financial data and analytics business, where only sold product in the UK to the London market. JP Morgan was a big customer, and they said, we love you guys, but you just need to have a presence in New York and in Hong Kong. For us, we are standardizing our systems, we're standardizing operations. You either lose London or you gain Hong Kong and New York. And so that kind of gives you a spur to your internationalization strategy that might not otherwise have been there.
So it's a strategic imperative, and more than just it's nice to have, it's you got to do it there.
Yeah.
So fascinating. So.
Similarly, there's certainly one we've done recently there. You look at the potential buyers for that business, and that was one of the parts of the DD. We go, well, who might buy this? And the biggest outcomes you're going to get will be from US buyers. So not having US presence, and the team were, well, it's clear that these would be the perfect people for us, and we work with them not in the US and other places. Well, we need to have a presence there. We need to have some sort of market share there, so we're on their doorstep, knocking on them, getting them ready to come and buy us. So, there can be lots of different driving features.
Yeah, I think with technology companies, there is an imperative almost, because you've, on the one hand, taken on a lot of costs. You've built out a product, R&D, and that really does need to be amortized over a certain number of customers. In Europe, we don't have a single market that in some ways is, quote, large enough. I made a mistake recently of asking a very successful Indian company, what's your geographic growth plan? And he looked at me like I was crazy. 7 billion people here. I don't need a geographic growth plan. So I think we don't have that luxury. So I think most European companies tech companies very early on have, and in some cases even Series A for venture companies are about international expansion. So that's a very critical part and quite considered very early on in tech companies.
So that's an interesting point when you say it comes early on there. So, and maybe I'll start with James on this one here. Is when do your companies start asking about international? When do they start raising that point? What's the factors that they start looking at? And what would be probably the primary one in a lot of cases?
Generally, there'll be put together a business plan, and you can pretty much just double it and stretch it out over 2 years or how long, much longer than they think it's going to take. One of the bits we always are keen is having obviously founding DNA in country. And then there's sort of timing of how that fits together. Have you got 2 founders? Could you send one out there? Have you got 1 founder? Is the UK business stable enough to go at the moment? When fits with those. So there's lots of different things. There's always kind of different things to consider. And then you've got, as I said, I think we did a tally there. It's about 19 of our 50-odd companies are looking at the US or in the US at the moment. Of which maybe only 2 have sort of founders there. So there's a lot of, you've got to move families, you've got to move, all the kind of bits around it. It sounds easier than it inevitably will be, and it'll cost a hell of a lot more, and tech talents are expensive. So, it's we kind of take their plan, say, that's great. Going to rethink about this and double down and consider all the bits around it. And everyone's like, nah, it'll be fine, don't worry. But yeah, I guess our investment models always stretch them out twice as long.
But we had a TV production business that was looking to go from the UK to the US, both Los Angeles and New York. And the single biggest issue was who was going to be the culture carrier that was going to kick off the operations in those two markets. It's fine going out there and hiring people, but somebody had to be on the ground to establish the culture, to make sure that you weren't creating another business with another set of values that would easily then spin off in due course. You had to create the glue that's going to keep all that business together.
And you've got to hire 2 sales directors because the first one will be crap. So the time he's failed, you've got to have one.
So, now that's an interesting point that you raised there, Kevin, because all of a sudden you've got another risk that's introduced to international expansion, which is almost something that you can't quantify, the culture element there. For you as investors in a business like that, how do you guys keep tabs with your CEOs and your management teams on international growth, and how do you look at that? Do you take an active role? Do you are you more strategic? Are you more hands-on?
We will debate with management. Well, one, does it make sense given where the business is at to embark on the international growth? But then, probably more importantly, is how should we go about it? So, Is it through acquisition? Is it through joint venture? Is it through boots on the ground, organic startup? And there's no right or wrong answer. There's no set playbook. You've got to work your way through it. When it's acquisition, which often in our case it can be, we will effectively become the M&A sort of pipeline manager for that international piece. And we'll do a lot of that groundwork, bringing, in partnership with management, but we'll typically take the lead on that. It gets tougher when it's organic, because you've got to invest in a hole in the ground. The one experience we've had of a joint venture is it's incredibly difficult to get a partner for whom there's a kind of this parallel, sort of similar level of priority. We had an alarms business that we were trying to take from the UK into Northern Europe, and we partnered with a Northern European company, and we were trying to run quickly, travel fast, really try and capitalize on the opportunity. We just got caught up in bureaucracy and real problems. They were great, on paper they were a great commercial partner and gave you great you were really on the front foot going into the market, but you just couldn't get over this sort of treacle that they were having to wade through.
Yeah, I would agree with that. As a rule of thumb, joint ventures slow you down. There's more decision makers, different priorities.
Maybe as a counterpoint to that, so VT, we come in earlier than where Bowmark tends to come in. These are companies that already have a certain amount of scale, but usually around 5 to 10 million in revenues. The entrepreneurs have set up terrific businesses, but they tend to be more local. And so we really come in and focus on this 1 year plan. We don't think there's a 180-day plan in this part of the market. So we really focus on the first 1 year, and it tends to be quite operational as well. How are we going to get to the US? Which other markets are we going to consider? Who's going to do the hiring? Who moves over? So there's quite a bit of operational depth involved, and we will get involved in things like recruitment, and whether it's us or our advisors or the network will get involved, certainly quite hands-on in the first year.
Excellent. So it sounds like all of you take at least some role in that expansion throughout the process there. So I'm going to throw out kind of three large markets just to be general here, but expanding to the U.S., expanding outside of the U.K. to broader Europe, and expanding to Asia. I'm going to kind of make this a jump ball here. What's the one topic in each one of those regions that you guys see is the jumping off point with every company? You say you've got to do this or you've got to look out for this. What's the rule of thumb, if it exists, or the biggest fear or the biggest risk that you worry about in each market there? So I'll open it up to any of you all.
Interesting. So it's very rare that people say, I've got a European expansion plan in our portfolio. Mm-hmm. They might look at certain markets because they've got opportunistic reasons to go into it. They won't say, I'm going to Europe, because I think typically because it's so many different markets in itself. Yeah. You can't sell the same thing to the Spanish, the Italians, and the Germans, and the French, and so forth. Whereas when you're looking sort of west, you've got California, which is the 5th largest economy in the world. I checked that as well the other day. I keep quoting that. Apparently it's true. But you can go, and if you can win California, actually, you're then on a really good launch pad to go to the rest of the US. So normally it's teams coming to us and saying, look, we think we want to do X, Y, and Z, and it's kind of trying to work out where that fits into. And also when you're thinking about funding rounds, if we're saying it's going to cost $500,000 to do it, and you've got a runway that's giving you 18 months, you're going to have to go out and fundraise to do X, Y, and Z if you're going to if you want to do it now, or it can become part of the next sort of cycle of plans that you're doing. Versus there might be opportunities which are we've just sold to someone we never thought we were going to sell to, and this is going to be huge, and therefore we need to go out there now. So there's a bit of scrabbling. So kind of every situation is just so different that it's hard to.
Any other thoughts from the other markets?
I'd say that China, for instance, there is rumours around the fact that you need to be careful around your IP, which I guess I can't comment on too much, but all I know is that we are very careful about our IP when we go into China, and it's stood us in very, very good stead I mean, it's a world it's a bit wild, but the market is huge. And if you can make progress and you can design, we've a small example of just to give you the scale of China in a very niche business. We invested in a business called WSP Textiles, which makes the cloth for snooker tables. It is the best and the biggest cloth manufacturer in the world for that particular niche. There are 10,000 snooker tables in the UK. That is the second largest market in the world. In China, there are 10,000 tables made every year. So getting into the China market was an imperative, which we were already in. But the cloth gets refreshed every year, broadly. And when it got refreshed with a Chinese copier's product. And we redesigned the product to make it more applicable to the Chinese market for their environment and the temperature, and so that the fitters could do it quickly. And all this, and the IP was much more complex than the standard cloth, and that allowed us to make massive inroads into the only really important market for that particular company. But we were super careful around IP.
So IP strategy for China there.
Yeah.
Is the one, so.
On the to continue the racial stereotyping theme, I completely endorse the IP in China is something to watch out for, having had personal experience of that. Getting into France and Germany, it's almost, I would say, almost impossible as a Brit to try and do that. You've got to have a domestic national leading the charge. And in the US, I would say actually we've had a very positive experience. The one good thing about, again, racial stereotyping of Americans is they don't waste your time. If the answer is a no, you pretty much directly get the no. Whereas in Italy, you can be waiting for the yes. They just won't tell you no. They'll keep the dialogue going, and you can waste a huge amount of time.
I think there's a different type of IP issue when you're going to the US. So I would, in technology, I'd first of all want to know why that company needs to be in the US. Not every tech company needs to be in the US. Very competitive market, and but certainly if there's CEOs hell-bent and there's a real opportunity in the US, by all means, I think one of the things I'd want to see is that there is a systematic and kind of defensive approach towards IP protection, which is different in the US than in Europe.
It's it definitely, you got to have a bigger war chest, and
Yeah.
depending on the market there. So I'm going to pause for a second here because we've got a great discussion going, and I've got some great questions from the audience. So we've got a from Anonymous who's out there. Who I don't know who Anonymous is, but I thought this was an interesting one. So the question was, if your international expansion, if success is uncertain, is it better to do a try and fail approach here and actually pull it off, or the quote here was, or do you want to sell the sizzle of a potential international expansion as part of the exit, value that you're selling there, right? It's the possibility of this. So at least that's how I've translated this. Curious as to how you guys have approached that, the kind of the risk reward of international and also the exit valuation. Do you put your cards on the table, or you hold it as a possible TAM for your?
Well, as I said at the beginning, we're a very key point of our expansion. We're not at the later stage where you're really relying on M&A as your expansion strategy. So for us, it is really very much organic growth, and that is typically for tech outside the core market. So we deliver certainly part of that geographic expansion, and then there does need to be a story for the next investor, and that's likely to be possibly another geography, maybe Asia, maybe more M&A, but certainly we start that process.
Gentlemen, any difference?
No, it's a very apposite question. We've got a business that we're lucky enough to have found other avenues for growth domestically. We've always had this international growth strategy that it's a little bit binary and it's a little bit scary. We have effectively scoped it, had some introductory kind of forays into the market, but it's very much left out there as unproven, but definitely hasn't been proven that it doesn't work. I think it goes to also who your buyer is going to be, because if it's private equity, they're probably going to be, they won't have an independent view necessarily, where if it's trade, there's a greater chance that they will they will have a view as to whether you can take that business model into another market.
I think an adjacent point to that one is timing. So I think that one of the great things that the private equity community is good at is helping with international expansion in a general sense. But I think that the help that they give generally can slightly morph over time. So what I mean by that is when you've just made an investment, you're very willing to continue to follow your money and to push and to try and make those moves in those international markets. If you've held an investment for a longer period, or you're looking towards exit, and someone says this is a great idea, like we can make a massive step up or make a bit of a loss. What should we do? And you've been sitting on this successful investment for 4 or 5 years. Your tendency will be to say, let's let the next person do that. That comes with the enthusiasm and the timelines needed for it not to succeed. Because one of the big problems with international expansion is that you are making bets today about a outcome that you don't really know that's quite a long time in the future. And so it's that risk-reward profile that morphs over the lifetime of an investment company.
So let's see if we can pick up also the funding question here as well in our discussion. So I heard comments about joint ventures. I've heard comments about, we've got to hire some people and move some people there. How do you pay for it? Do you guys do it? Do you bring in investors who are locally? Do you like to bring in investors from the UK that are more specialized in international? What's the preferred dynamic in your experience, and how does that reconcile with your own investment strategies? Do you get U.S. investors that may be more, they may be more aggressive and focused on the top line instead of the bottom line, or versus a European investor that tends to be, a little more profit focused? How do you see those playing out a lot of times?
I guess from our point of view, we see. We spend a lot of time in the US talking to investors over there about sort of some of our portfolios, some which fit, some which don't. And at differing stages and on different coasts, we've seen different things. So we'll see someone on the West Coast who are quite comfortable in putting in sort of seed and Series A, I guess what you call pre-early risk money of seeing, getting a seat at the table for later rounds. And then recent Series C we've been involved in with a East Coast VC was much more sort of, I guess, private equity-esque in its diligence and processes, and how they approached it. Funnily enough, neither of those businesses are based in the US, but I have heard from others when we spend time out there is they like to see the founder out there. They like to have real input. They like to have real added value, because this is the big market. This company's gonna make or break in. So there's rumours of more cash coming over here. Stats are varying, and styles are different as well. One where we're going is Europe. We're going with the European funder, a European strategic, and I'm much more comfortable with that than it being a sort of UK funder going into that market, because they know it and they've got a footprint.
So there's a benefit to having a local investor, is how you think about it. So otherwise, do you all take a different approach, or so?
Well, I think in Europe, most of the people in this room, the beauty of being in London and in the UK is that you've got basically the world at your doorstep. You've got most of the larger funds here, and so almost everybody's got some experience with certainly taking businesses across Europe and into the US. I think if you're looking beyond that, that's where you might want to seek some advice and help. And a little bit of advice for the entrepreneurs is it's really down to your own due diligence on the people who are going to be investing in your company, not just the firm, but down to the individual. Has that individual, it's a really person-to-person business, has that individual scaled and successfully scaled companies in the places that you want to be?
Gentlemen, any counterpoints? Or?
For us as a later stage investor, we will look for the company to effectively fund the growth, or we will fund it ourselves. We very, very rarely, I think we've ever done it, brought in a third-party institutional investor to take on sort of project funding. The one thing we will do is look at the debt funding and start to introduce a sort of a hedge, if you like, in the structure, so to match your capital structure with your revenues from overseas, so you get the currency matching, currency hedge in your balance sheet.
Matt, any contrast, or you agree, disagree?
No, I agree with all those comments. Yep. I think on particularly what Nazo was saying, that it's quite good to have that experience of a new market and have that investor be able to bring their network to bear. I think that is a positive. But I personally think that practice what you preach a little bit, and if a company is thinking about expanding internationally and put boots on the ground internationally, surely its investor should have boots on the ground where you're headquartered, because it's that closeness of that relationship which is actually fundamental to the decision making at the board level and the implementation.
Well, we are out of time here. I'm going to do my final question since it's international. What is your pick for the World Cup? Who wants to get pass? Besides Russia, who I think is going to rig it or something.
You know what? There's no expectation on England, so why not?
You're going to go England, all right.
We'll be gritty losers in the semi-final. It's going to be a majestic defeat.
That'd be enough.
All righty. Well, I think we're out of time here. So, unless anyone has another pick, so we'll let you go. Thank you all. So.